Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is +8491 432 6556. Or you can also scan the two QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She's a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email hongdongwin@vcfc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trường Đại Street, Hoàn Kiếm District, Hà Nội, Vietnam. And today I'm gonna share with you about the Vietnam Strategy 2023 Market Data. Market performance in 2022. Vietnam's rebounds all declined in 2022, reversing the substantial gains that they enjoyed in 2021. The VN Index, which represents all stock traded on the Ho Chi Minh City Stock Exchange, fell by 33%, and the large cap VN 30 index fell by 35%. The Hanoi Stock Exchange fell by 57%. The unlisted public company market fell by 36%. By GICS sector, the leading contribution to the VN Index decline came from real estate, 32%, followed by financials, 23%, materials, 14%, industrials, 13%, consumer staples, 7%, and consumer discretionary, 3%. At the stock level, 5 of the 10 largest contributions to the decline in the VN Index came from real estate stocks: NVL, VHM, VIC, DIG, and PDR. The other largest contributions to the index decline came from HPG, GVR, TCB, MSN, and VPB. The chart below illustrates what we believe were the two main sources of downward pressure on Vietnamese equities in 2022: rising interest rates and the disruptive impact on the corporate bond markets and the real estate sector from high-profile anti-corruption actions by the government, forced liquidation of margin positions in several stocks in Q4 2022 drove the VN Index to its intra-year closing low of 912 on the 15th November. VN Index performance and key events in 2022. Flows. Foreign net buying returned in 2022. After 2 years of consistent domestic net buying and foreign net selling in 2020 and 2021, foreign net buying returned in 2022 and was particularly strong in November and December. Foreigners were net sellers of $2.6 billion worth of Vietnamese shares in 2021, but were net buyers of $1.3 billion in 2022. However, gross foreign trading value in Vietnamese market decreased in 2022 compared to 2021, which we attribute primarily to the substantial decline in share prices in 2022. Meanwhile, buying activity by corporate insiders, major shareholders, directors, and corporate buybacks was much more subdued after the market's decline in 2022 than in the periods following the short bear market at the start of the COVID-19 pandemic in early 2022. The velocity of turnover in Vietnam, the value of trading compared to average market capitalization, also decreased from 100% in 2021, the highest level in the past 10 years, to 76% in 2022. Lower buybacks in late 2022 compared to early 2020 may reflect lower confidence among company insiders that their share prices were undervalued or tighter financial positions follow the 200 basis point increase in policy rates in H2 2022. However, a change in buyback regulations that became effective from the 1st January 2021 may also have contributed to the lower buybacks in 2022. Under the new law, a public company that wants to buy back its own shares must ask for shareholders' approval to reduce its share capital. Prior to this change, businesses that wanted to buy back their own shares only needed to disclose information about the purpose of buying, the number of shares to be purchased, and the source of the purchase capital and the implementation time. Corporate buybacks in 2020 and 2022. Major ETFs investing in Vietnam saw positive net inflows in 2022, led by the Phu Bond VN30 ETF and the Diamond ETF. Major ETFs investing in Vietnam. Cumulative ETF net flows in 2022. Average daily trading value on 3 bases combined declined from 1.15 billion US dollar in 2021 to 862 million US dollar in 2022. However, this was still much higher than the average daily trading value in any year prior to 2021. Meanwhile, the total number of brokerage accounts increased from 4.3 million to 6.8 million. Margin loan outstanding decreased from an estimated peak of about 178 trillion Vietnam dong, 7.5 billion US dollar in Q1 2022 to 141 trillion Vietnam dong in Q2 2022, but recovered to 156 trillion Vietnam dong in Q3 2022. Q4 2022 data is not yet available. Please see the other financial section of this report for more details on margin loans. Strong gains in share prices boosted Vietnam's total market cap at the end of 2021 to 344 billion US dollar, representing 94% of 2021 nominal GDP. However, the sharp declines in 2022 reduced total market cap to 222 billion US dollar, or 36% of nominal GDP. The theoretical foreign ownership limits on Ho Chi Minh Stock Exchange and Hanoi Stock Exchange, the maximum amount of market cap that could be owned by foreign investors, assuming no practical limitations due to major domestic shareholdings, decreased broadly in line with the decrease in market cap to 78 billion US dollar. Earnings forecasts and market valuations. Consensus forecast. The VN Index ended 2022 at 1,007. The index trailing 12 months TTM PE was 10.5 times, just over 2 standard deviations below the average since the end of 2014 of 15.5 times. The 12 months forward PE based on Bloomberg's consensus earnings forecast was 9.5 times, also just over 2 SD below the average since the end of 2014 of 13.8 times. VN Index earnings have grown faster than MSCI global indices and tips markets on a cumulative basis since the end of 2013. Rolling 12 months forward consensus EPS forecasts show a similar profile. Meanwhile, PE multiples for the VN Index look undemanding in comparison with global markets and tips markets. Technical outlook, the VN Index looks positioned for a good start to 2023 as it has crossed above the EMA 50 to signal bullish momentum for the midterm 1 to 3 months trend. Therefore, we expect the index to rally Q1 2023 toward 1,200 before reaching a position of equilibrium. After that, the technical outlook is more mixed as it predicts that the VN Index could fluctuate in a sideways range between 900 to 1,200. Vietnam's market classifications. Vietnam remains on FTSE Russell's watch list for reclassification. According to the latest FTSE Equity Country Classification annual review that was published in September 2022, Vietnam remains on the watch list for possible upgrade from frontier to secondary emerging market status. Vietnam has been on this FTSE watchlist since September 2018. Vietnam currently meets most of the criteria required to be upgraded to a secondary emerging market. However, Vietnam has not satisfied the Salzman cycle DVP criterion, which FTSE currently evaluates as restricted due to the market practice of conducting a pre-trading check to ensure the availability of funds prior to trade execution. In its September 2022 review, FTSE also stated that improvements to the process for the restriction of new accounts are required, as is the introduction of an efficient mechanism to facilitate trading between non-domestic investors in securities that have reached or approaching their foreign ownership limits. Vietnam remains in the MSCI Frontier Markets Index. Morgan Stanley Capital International's assessment of Vietnamese market remained unchanged in its annual market accessibility review published in June 2022 as illustrates below. MSCI Market Accessibility Review June 2022 Vietnam. Foreign ownership limits level. Companies in certain conditional and sensitive sectors are subject to foreign ownership limits ranging from 0% to 51%. These limitations still affect more than 10% of the Vietnamese equity market. Foreign room level. The equity market is significantly impacted by foreign room issues. More than 1% of the MSCI Vietnam IMI is impacted by a low foreign room. Equal rights to foreign investors. Some company-related information is not always readily available in English. In addition, the rights of foreign investors are limited as a result of the stringent foreign ownership limits imposed on both total as well as individual foreign investors. Foreign exchange markets liberalization level. There is no offshore currency markets and there are constraints on the onshore currency market. Foreign exchange transactions must be linked to security transactions. Investor registration and account setup. Registration is mandatory and account setup requires the approval of the VSD. Market regulations. Not all regulations can be found in English. Information flow. Stock markets information is not always disclosed in English and occasionally is not detailed enough. Clearing and settlement. There are no overdraft facilities and the pre-funding of trades is required. Transferability. Certain of exchange transactions and in-kind transfers require prior approval from the state securities commissions of Vietnam. Potential positive developments on market classification. Vietnam has several new or amended laws related to investment, which we believe could lead to improved access to Vietnamese listed stocks for foreign investors. We believe this is one of the remaining critical requirements for MSCI and FTSE to upgrade Vietnam to emerging market status. However, while these laws have been passed by the National Assembly, we provide a broad framework and a series of decrees and circulars to flesh out the details that have not yet been finalized. The three key laws are: 1. The investment law. This defines the sectors for which access for foreign investors is not allowed for subject to certain conditions. Restricted sectors. In theory, the principle is a negative list. If a seller is not restricted, foreign ownerships up to 100% should be allowed. The enterprise law. This introduced the concept of a non-voting depository receipt for the first time in Vietnam, raising hopes that Vietnam may introduce a similar scheme to Thailand's NVDRs, which have been established on the Stock Exchange of Thailand for many years. The securities law. This was passed on November 2019 and became effective on the 1st January 2021. It states that the government will be responsible for issuing one, detailed regulations on foreign ownership limitations and conditions, and two, producers foreign investment and participation in the securities market by foreign investors and organizations with foreign capital. The decrees and curriculars to implement these laws remain to the finalized. Therefore, it's difficult to predict whether they will ultimately lead to a liberalization in foreign ownership limitations that result in an upgrade in Vietnam's market classification. However, Vietnamese authorities have expressed a goal to see the market upgraded to emerging market status by 2025, which implies an intention to solve some of the remaining issues within a time frame. In terms of meeting the clearing and settlement criteria, Vietnam is working with South Korean partners to implement a new securities trading system that was originally expected to be completed in 2021 but has since been delayed. Vietnam also plans to establish a clearinghouse according to the central counterparty model. With the application of this new clearing and settlement model, Vietnam hopes to solve the problem of the current requirements to be pre-fund equity purchases, thereby moving an important barrier to an upgrade to emerging market classification by MSCI and FTSE Russell. The new securities trading system is also expected to contribute to the successful implementation of increased trading flexibility and new products such as day trading, sell-the-penny securities, short selling, and new derivative products, all of which could attract increases in activity from domestic and foreign investors in the future. We believe that a successful implementation of the new trading system in 2023 could lead to the Vietnamese market being upgraded by FTSE Russell to secondary emerging market status in the next annual review in September 2023. However, we believe it is unlikely that Vietnam will be able to meet enough of the outstanding criteria to qualify for upgrade to emerging market status in MSCI's markets accessibility review in June 2023. If there is good process in terms of increased foreign access to the market over the course of 2023, MSCI could signal an upgrade in mid-2023. MSCI upgrades are normally implemented 12 months after the initial announcement, which which would imply that 2024 would be the earliest likely timing for Vietnam to become an active cons constituent of the MSCI Emerging Markets Index. And that's all what I want to share with you about the market data. So, like, subscribe,